Hello investors, this is Noah from Seeking Buffett Moats. Today I'm going to show you how you can use Excel to quickly and easily analyze 10 years worth of 10K financial data from any publicly traded company. This spreadsheet that I'm going to walk you through allows users to analyze a stock's 10K data to determine if the company has an economic moat and might be a good long-term value investment. Now normally to analyze 10 years worth of financial data, companies will charge you hundreds of dollars a month. I'm going to show you how you can use Excel to get this data with little to no money down. I'll be walking you through the spreadsheet that I use for 10K financial analysis. If you find the spreadsheet useful, it's available for purchase at seekingbuffettmoats.com. You can find the link in the description, or using this video, you can try to make the spreadsheet yourself. All right, so let's begin. The spreadsheet is going to use the past 10 years of 10K financial data to determine if the company has an economic moat. So in order to determine if the company has an economic moat, I encourage you to do some research on what economic moats are, but for simplicity, this spreadsheet will look at if the company has been growing its earnings per share, its sales, its book value per share, and its operating cash per share effectively over the last 10 years. If it has, you can kind of determine that the company has an economic moat. Next, it's going to look at the management. So over the last 4 years, it's going to look at the long-term debt of the company, as well as the return on investment that the company has been producing over the last 4 years or so. Finally, if you determine that it has an economic moat and that it has an effective management team, this spreadsheet will use the current earnings per share as well as the predicted growth of the company based on the last 10 years to predict a good price to pay. It's very simple and pretty effective. So the next thing that the spreadsheet is going to walk you through is how to gather data. If you have any experience investing, you probably already know how to gather this data. The spreadsheet has a tab just to walk anybody through it. It's very simple, so all the data that you need for this spreadsheet is publicly available from the SEC. There's a link provided in the spreadsheet, so if you go ahead and click the link that you see there, it's going to bring you to, just pull it up here, the SEC website. You can see the link up here, sec.gov/Edgar is the what you can type in if you just want to get there yourself. It's very simple. Once you're here, you're simply going to type in the ticker for the stock that you want to look up. So let's say we want to look up Amazon. The symbol for Amazon, the ticker for Amazon is AMZN. We're going to type that in, and you'll see that it pulls up all of these reports. There are 8Ks, 10Qs, which are the quarterly reports. What we want to look for is 10K. So we're going to type in 10K into filing type. You can see right here, 10K, and look at that. We have all of the 10K documents filtered. What you're going to do is click on, if it's available, you want to click on interactive data. That's just going to be a much more formatted data. If you click on documents, it's going to bring you up just the printout of the 10K, which is still useful if you need it, but all the data is like nicely gathered in these interactive ones. So we're going to click this interactive one. This is going to bring up the latest, they're in chronological order, so this is going to be the latest 10K. We're going to click financial statements here. If you click on these tabs on the left here, you can get the cash flow statements, the statements of operations, income statements, balance sheets, shareholders' equity, and you can click through all of them. This is all of the information that you'll need. So on the next tabs we're going to go back to the spreadsheet. On the next tab to the spreadsheet, we will input the data that you see here into the spreadsheet. So once we know how to find the data, the next step is to actually input it into the spreadsheet. So on the right side of the screen, I have the spreadsheet up. We're on the Moat Analysis tab, and on the left side of the screen, I have the SEC Edgar website up. What we're going to do right now is search for the company that we want to analyze. I've chosen to do TJX, which has the ticker symbol TJX. We're going to hit enter, and then we're going to filter by 10Ks. So that brings us up all the 10K documents. TJX is a retail company that owns TJ Maxx and Home Goods, several other stores in the United States. So here we'll open up the interactive data 10K, the latest one. So it's opened up here. We're going to go to financial statements. We'll start with the consolidated statement of income. So what we're going to do here is we're going to, in year one, enter the latest year. So that will be 2020. each 10K will pull up 3 years of data. So we'll do the first 3 years here. So 2019 for year 2 and 2018 for year 3, going in chronological order. We will then enter the values that you see in the 10K into the spreadsheet. So the first one here is net sales. It's critical though to see that this is in thousands of dollars, and shares are also in thousands. So we have to add 3 zeros to the end of the numbers that we see here. So the first year for sales, I'll enter 41716,977, 1, 2, 3 zeros. I'll do the same thing for 2019 here, so 38,972, 934, 1, 2, 3, and 35,864, 664, 1, 2, 3. Now you can see that the spreadsheet is showing the growth rates of sales. It's already started to populate them down here. So what the spreadsheet is doing is it's looking at the growth rate every year using the numbers from the company. So now we've entered the sales. Next we will enter the net income, which we can find here. So that's going to be 3272, 193, 123, 3059, 798, 123, and 2607, 948, 123. Now the reason that the earnings per share EPS growth rate hasn't shown up yet is because we don't have the number of outstanding shares entered. Net income is usually shown in net income per share, so we need to additionally enter the number of diluted shares. So we'll do this number here. So it's going to be, and remember that it's in thousands of shares. So there are 1, 2, 2, 6, 519, 1, 2, 3. This is the number of outstanding shares: 1259, 252, 123, 1292, 209, 123. Now we can show that. Now we can see that the growth rate per year of the earnings per share is also displayed. That's all the data from the consolidated statements of income. Now we'll look at the consolidated balance sheets. The first one we want to look for is long-term debt. So that will be other long-term liabilities. That took me a second to find. So 851, 116, 123, 1354, 242, 123. That's the debt that will last more than a year for the company. It's important to include that because the debt that's paid for this year is kind of like your credit card debt that you're paying off quickly. Longer term debt can kind of be an issue if a company has a lot of long term debt that they're struggling to pay off. Unfortunately for the balance sheets, we only get 2 years at a time, so we'll have to pull open a separate one to get more. Next we'll look at shareholders' equity. So that is down here. So total shareholders' equity is going to be 24145 003 123 14326 029 123. And since we've already entered the number of outstanding shares, it calculates the book value per share, which is just the shareholders' equity divided by the number of shares. And we can see that we've started to populate the book value per share growth rate as well. The final statement that we'll need to look at is the consolidated statement of cash flows. So the first thing we want to find is the net cash provided by operating activities. So that's the net cash that was provided from the company this year. We can see we get 3 years of data. So 4066 540 123 4088 459 123 3025624123. And so the cash provided is then subtracted from the cash that was used for investing operations this year. So that's going to be net cash used in investing activities. Since it's got the parentheses around here, that means it's negative. The spreadsheet will add them together. So if it's negative, you need to make sure that it's a negative number. So we're going to put negative 1461 971 123, negative 623 552 123, negative negative 1,012,736,123. Now we can see that the total operating cash per share is calculated out. We can see that the free cash flow is the cash provided by investing activities subtracted from the cash used in investing activities. There's also this financing activities. We're not going to include that in this. We just want to see because that can sometimes screw up the numbers. So we want to just see what the cash provided from investing activities was, and our operating activities and cash used for these operating activities. That's going to give us our free cash flow number. So I've gone ahead and filled in the rest of the values here. There was no sense in having you watch me do all of these. You can see that we've gone all the way out to all of the data that was available to the last 12 years. You really only need to do up to year 11 to maximize the utility of the spreadsheet, but I've just decided to go all the way to 12. I wanted to point out that I had the long-term debt incorrectly. I'll make a note of it in the video, but instead of I should have used the aggregate maturities of long-term debt. That's all of the long-term debt that the company currently has, instead of just using the other long-term liabilities value. That's going to give us a much more accurate picture of what the long-term debt of the company is. This bottom section of the sheet shows the growth rates year to year of the company. So you can see that the EPS growth rate was 10% from 2019 to 2020, 20% from 2018 to 2019, 17% from 2017 to 2018, and you can see the same thing for the sales growth rate, the book value per share, and the operating cash per share growth rate. This moat analysis section shows the growth rate per year for the past 1 year out, 3 years, 5 years, and 10 years. So you can see that for 1 year, it's just the exact same thing as the 1 year growth rate in this category, but the 3 years out is looking at the growth rate from year 4 to year 1. So it grew. The earnings per share grew 16%, the sales grew by 8%, the book value per share grew by 80%, and the operating cash per share grew by 6%. You really want to make sure that all of these numbers are mostly positive and trending kind of similarly. So it's really strong to see that the earnings per share has grown at about 14% over the last 10 years. The sales have grown about 7% per year over the last 10 years. The book value per share has grown a crazy amount. The operating cash per share has generally grown by about 8% over the last 10 years. The most recent year, it seems to have had a weird dip. That's not really hugely concerning. You'd probably want to investigate in the 10K why that might have happened, but overall this looks like this company TJX performed really strongly over the past 10 years, and so that's a good indication that it's likely to continue growing. So this tool just really shows you and it really breaks down the growth rates of the company over the last 10 years. It's a really good starting place for your investing analysis. If you'd like, you can view the data in chart form, so we can see all 4 of our metrics there. We've got earnings per share in blue, book value per share in gray, operating cash per share in this gold color, and then sales in this orange color. And so you can see that all of these, for the most part, are trending upwards. There's this huge jump in book value per share, but otherwise everything is trending upwards uniformly. So that's a good sign that the company has been doing well over the last 10 years. If we go back to the Moat Analysis tab, you can click on the button at the bottom. This will bring you to the Management Analysis tab. The Management Analysis is looking at the current management, so it generally just looks at the last 4 years that the company has been performing. We want to see how much debt the company has, and then we want to see how they've been using their return. So that we want to see how they've been using the money that they're spending. So their return on investments, capital, and their return on equity. Generally, we want to see a return on invested capital and a return of equity of about at least 10% over the last 4 years. Clearly, we can see that we have well above 10% for those numbers right now, so it's looking like a really good number. If we saw negative numbers, that would be an indication of bad management. If we saw numbers that were like 1% consistently, that might be an indication of bad management as well. The debt analysis is a ratio of the long-term debt to the earnings. So a higher number means that the company has more debt than they do earnings. If you see a number above 1, it means that the company has more long-term debt than they do earnings per year, which means that it could take them a long time to pay off their debt. You can see that the debt to earnings ratio for TJX is well under 1 at the moment for the last 3 years. So this is an indication that they don't have too much debt or an overbearing amount of debt that could cause them to go into bankruptcy. So it looks like TJX for a while is going to definitely avoid bankruptcy based on these numbers, since they're less than 1. We typically look for numbers that are definitely less than 2 years. Anything over 2 years is something you might not want to invest in unless you really know what you're doing. Okay, so once you've used the last 10 years of the company's financial data to determine if it has a moat on the moat analysis tab, and once you've determined that the management over the last 4 years has done a good job of leading the company, it's finally time to move on to the price calculator tool. So we can do this by clicking the button here. It's going to bring us to this new sheet that we haven't seen before. So what we're going to do is we're going to get the current stock price for TJX in this case. We're going to get the earnings per share trailing 12-month average. So that's going to be the earnings per share of the last 12 months. And then we're going to estimate a growth rate of the earnings, and that's going to give us a predicted price 10 years from now, and then that's going to back out a price that we should pay for it now in order to see a substantial growth rate in the next 10 years. So we will open up this tab. So we will figure out just by Googling TJX stock price. I googled it wrong, but so right now the price of 1 share of TJX is 68.46. Then we're going to Google TJX EPS TTM. We can click this Y charts link here. That's going to find it for us. So this is interesting because you can see that there's been a very brief dip in the trailing 12-month EPS. Now, that was reported in October of 2020. So as you know, the coronavirus has impacted a lot of businesses. Because of that, I'm going to say that we can use the latest after that, which we'll use before the coronavirus, the January of 2020 earnings per share was 2.68. That's probably a more accurate representation of what the company was doing prior to the coronavirus pandemic and will do after the coronavirus pandemic. So we're going to use 2.68 because of that. So we'll say 2.68. Earnings growth rate. The way that we're going to determine how the earnings will grow in the future is by looking at the past. So I'm going to make this large. If we look at the growth rate for the company, it's been 10 for the earnings per share. We had 10% last year, 16%, 11%, and 14%. We'll be conservative and take the lowest of those numbers. So let's say that the earnings will continue to grow at a rate of 10%, even though in the past it's grown at a higher growth rate. So we will say 10%. The future PE multiplier, I usually use 20 for this. That is the price to earnings ratio that you'll see in the future. Generally keep this at 20. That's, typically what a price to earnings of a company is. So unless you have a better idea of what the price to earnings of the company is going to be, it's a good idea to keep this at 20. I like to see a rate of return each year of 10%. So I keep this at 10%. Margin of safety means how much safety you want to build into the price that the tool will recommend for you. 50% is really, really conservative. It's going to spit out a very, very low price. You might never see that price because the company will be performing well and it won't dip that much unless there's a big recession or something. So this number you can play around with if you want, but you can see down here that it predicts in 10 years based on this 10% growth rate that the earnings per share of the company will be $6.95. Based on that, with a PE ratio of 20, the price per share of the company in 10 years, it's predicting will be $139. The tool is then saying that the sticker price today for that company, if you want a 10% growth rate each year, is going to be $53. So you don't want to pay more than $53 per share. There's a chance that you might, lose your money if a recession or something happens. The margin of safety price is very conservative. If you can find a company that is at its margin of safety price that generally means that like a big recession or something just happened or something terrible happened to the company. So take a look at that. But really you want to look at this sticker price and see if the company is trading near that sticker price. If it is, it probably means it's a good price and that you want to buy the company at.